Welcome back to the channel, guys. Today is another Bitcoin and cryptocurrency update. We're looking at Bitcoin to break through the resistance levels, but I want to throw some hopium in at the beginning of the video, looking at Bitcoin on a longer term time frame, and then also update my superannuation fund. So basically my retirement fund. Now, some of you like to see that, some of you don't. And maybe it's just to do with the Australian tall poppy syndrome that a very few minority have. But if you do enjoy seeing that portfolio update, let me know in the comments down below. Some people don't want it. You can also let me know about that as well. But hopefully you do enjoy that and you just see the growth of the portfolio over time. I will mention early on for the Americans, if you're interested in building your wealth in your retirement funds, check out the link in the description for iTrust Capital. When you use that link, you'll get $100 of funding rewards for free. If you don't use the link, it's not included. So just make sure you use that link if you're interested in setting up your Roth IRAs and anything else like that to trade crypto tax free. So the hopium is to smash the like button and subscribe to the channel. And more importantly, looking at the quarterly chart of Bitcoin. So I've got my swing overlay here. This is my Gann analysis, basically the Gann swing chart, and the swing chart is still up. Now, of course, it would need to fall a long way down for it to break. But in the interim, it can make higher lows on the way up. And that's potentially what we're going through in this quarter of 2022. Now, I've got some longer term analysis to share with you in another video as well, looking at where the bottom can come in for Bitcoin. May not be a huge crashing low, but it should be a significant low. It could be slightly higher, but it will be a significant low, in my opinion, based on historical data that we have for Bitcoin over the last 12 or so years. Now, the yellow line here, the zigzag, is basically where we're seeing the major lows come in on the Gann swing. Now, this isn't a technical tool that you can use, but if you can learn to draw them, then you can throw them on your charts as well for any time frame and any market. This next part of the hopium is for when the extreme bears come into the market. We're on a bit of a move up at the moment, so the bears have sort of quietened down, but if the bears come back in the next quarter or the next few weeks, then I would expect them to start looking for targets beneath these yellow boxes. So on the way up, early on, 2011 to 2014, we kept going up. But we had this correction in mid 2013. And you would expect a lot of people to look to the bearish side and just see that the market has run up quite hard and it didn't really come back and test a lot of the $14 to about $60 range. The same thing happened on the way up to the top in 2017. It got a peak of 1,200 and then we dropped to the bear market low of 3,200. And at the time, there was a lot of bearishness calling for $1,000, $1,200, $1,800. I remember these very significantly. And I think that is what we'll see again this time around. If we start to come back down, there's a possibility of that. We'll see those big calls. We've seen it before already, say on YouTube and on Twitter. There's a lot of people calling for low prices, somewhere around the $8,000 to $14,000 range. And that's on the underside of this box here. It's not like any of these things can't happen, but I think it's far less likely that we'll see that this time round. Somewhere in the yellow box is potential. There is likely that we could reach prices in there because we haven't formed the final low yet, or there's no signs of it just yet. But if we do form the final low above this level, then so be it. We're above the $28,000 lows, and then we continue up. But I think maybe we'll find some sort of pricing within this range. But the extreme bears will come out, and they will look for prices underneath this box, somewhere, like I said, 14,000 to 8,000. So that's something to keep in mind. And I think the hopium can live on and fight another day into 2023. Like I said, stick around the channel, subscribe and like. I've got a longer term macro analysis of the time cycles for Bitcoin coming out real soon. Now, the update on my retirement fund, sitting at $286,000. I started with $26,000. I'm looking to transfer this over to SwiftX as soon as they get some staking and earning interest on stablecoins, Bitcoin and Ethereum. So I can hold that in an Australian company, earning interest on the amount that I have in there. I'm planning to add more money to this account throughout 2022, as I see this year as being the year that grinds away at some lower prices. And then over the coming years after that, I think we'll start to head higher again. So I think this is another good time to add a little more to this portfolio. For the short-term analysis on Bitcoin, we're watching the market crab its way over to the blue downtrend line. Last night or overnight, we saw 4.63% drop from where we currently were, which is basically getting rejected at our 50% level. So even if we use another short-term time frame here, 38,700, basically the same thing. I want to see this market get above at least $40,000, which are some of these lows that came in a few weeks ago. So as we start to climb, that's for some sort of security that we could see higher prices. At the moment, we're in no man's land. We're still trending sideways. But the good news is, on a very, very short time frame, is that we're not starting to break down some of these other major lows here at around 35,000. So we're still hanging in there, but only just. The Fed brings us some more Bitcoin news. Fed releases new research on risk and promise of stablecoins. Now, there was a 26-page document here. The main thing, if we go through the conclusion, is that the Fed is looking to preserve the stability. The report advocates for a two-tiered approach, which would have issuers relying on commercial banks for reserves rather than banking their tokens solely with Fed deposits. So we have the stable coins, then they have their reserves to back the stable coins, and they're saying, let's put those reserves with commercial banks, and that's our two-tiered approach. They didn't have anything really bad to say about stablecoins. It helps the market. The report found that dollar-pegged stablecoins have exhibited safe asset qualities compared to other crypto assets. Well, obviously, because people flee to the cash when the market crashes. These episodes demonstrate the potential for stablecoins to serve as a digital safe haven during market distress. So we see the same thing in the traditional markets. When the markets drop, people want to sell their stocks, sell whatever it is they're holding, put it in cash so they can buy back at cheaper prices. And they said in this report, we are focusing on the balance sheet effects and credit intermediations under a set of plausible assumptions. So they're not going through everything. This paper does not consider all the potential impacts of stablecoins on financial stability. Solana is the big one that's had some news over the last couple of weeks. We saw recently the wormhole network was exploited for 120,000 ETH or WETH. ETH will be added over the next hours to ensure WETH is backed one-to-one. More details comes shortly, working with the network to get the network back up quickly. So it's got nothing to do with the Solana network or the Ethereum network. It's the wormhole network, which was bridging the two together, that was exploited, and they stole 120,000 ETH or WETH, so the same value as an ETH. And now they need to bring that back to the network. Now, I think this is affecting Solana because it has the cryptos in the news, but overall, this still looks like a weak market. Tested the 115 so far, rejected, but the week hasn't closed. And then the other testing level here is around 130. That's the major breakdown. You can see this week here, just before I put the post out that I sold all of my SOL. Sounds bad. That we got the breakdown, and that usually happens at those 50% levels, and then it got crushed through the other support level. On the BTC chart, it doesn't look so bad, but again, rejected at 50% yesterday, as this is a daily chart, and then we're on our way back down. So rejected at some volume too, which doesn't look so good. At least it got some support at the 50% level. Now I've got my Bitcoin protection plan. I don't want to lose my BTC or my ETH, and these are the levels that I would be wanting to sell out at if we started to continue breaking down. Now, as I said, I've sold already. You get the breakdown here. That's one section. Then this would be the next sections that I would look for a breakdown underneath these lows, and then again underneath the next lows at around 70,000 Satoshi. So that's the lowest point here. Will it get there? I don't know. Is it guaranteed that it gets there? No, there is no guarantee, of course. And from this point, we could even see higher prices on the BTC chart. We just don't know. But at the moment, on a short-term time frame, it's not looking good as we got rejected at 50%, and we're starting to find our way a little lower at the moment. As with any asset, these prices can go up and test higher levels and do things that we weren't expecting them to do. And so if that happens, I am sure I will be seeing plenty of comments from people saying, well, you sold it all, you're a fool, it's gone back up. But I'm looking a little longer term here. I want to see it test some of these lows. I want to see it test the next low over here. I want to see how it reacts. And if it can't even get there, then that's an even weaker sign for my analysis. So if this is the only low that we could test, the 115, and we started to see lower prices over the coming weeks or months, then I think we'll come back down and at least try and get back into this zone to see if there are any buyers coming in between around $50 and $80. The Hopium from today's video: Bitcoin still looks like it's in a macro bull market. However, major cryptocurrencies and pretty much a lot of altcoins have broken major support levels. However, the hopium, the takeaway from the lower prices is we can continue to buy lower. So I'm looking for bigger or better support areas to come in and then see a reversal. So if structure changes on those charts, I will change my mind. I'm not fixated to a position long term. I want to see what the market is telling me and then act accordingly. The hopium, again, from that is that Bitcoin, if it starts to head up sometime later this year and early next year, cryptos, altcoins will potentially go up with Bitcoin. So we're going to get a quicker down and potentially a quicker up. Wait and see. Let's see what that structure gives us. Make sure you smash the likes and subscribe to the channel. I Trust Capital, link is in the description for $100 of free funding rewards. And I'll see you guys at the next video.